Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slate Points, California DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call Mom.
All right, well, welcome to Mortgage Mom Radio. I'm Debbie Marcoux, and I've got Heidi with me.
Hello.
And it is Wednesday, so we are live at 5. And what do? We are Mortgage Mom Radio. We bring you all kinds of education and advice about finances, your future, buying a home, refinancing a home, everything that you need to get into that property or fix that property, consolidate your debt. We do it all. We were supposed to have Krista on today. Krista Hermance is our trust attorney, and she would have been fantastic. But unfortunately, I got an email at 1:30 this morning that she was sick. So, and you know that
going around.
Oh, it's going around so bad. So she will be on with us in the near future. We've just got to get her healthy and in a better place so that she can come on the show and give us all kinds of tax advice. But or not, I'm sorry, not tax advice. We've got the tax grandma coming here in just a little bit too, and she's going to give us tax advice. But we are going to have Krista on in the near future to go over your trusts and how important that is. The medical power of attorney for those kids that you have that are just over 18 going off to college. Those are very, very important as well. So she does it all. She takes care of your family, and we will have her on at a later date. But right now is catching up with Mom.
My favorite part.
Yeah. So what's up, Heidi?
Oh, well, I think we should start with you. What'd you do?
I bought a motorhome.
Yay!
Yay, I did it. And I had a fantastic experience. So I'll tell you guys all about that in a future show. I might actually have them come on and talk a little bit about, how that went, just like I did with the Tustin Buick GMC. Those guys were great as well. Yeah. But I went through La Mesa RV. And it was really streamlined. It was pretty good. They were really great to work with. I started with the internet department. I knew what I wanted. I mean, it was 3 years coming.
Oh, yeah.
For 3 years, I had been, looking for which motorhome did I want, what goodies did I want on it, what brand did I want, a lot of YouTube, which is what made me think like, hey, we need to do this on YouTube.
No, did you get the one with the really funny guy from the video that
I
you
did.
showed me?
I did.
Oh, I loved that
yes,
guy.
That guy was
so
awesome.
amazing.
Yes, but I was not going to fly halfway across the country and then drive that thing
Right.
back. So, but I did a lot of time on YouTube to kind of decide which motorhome that I wanted. And then obviously, I had to put everything on hold because the one that I wanted was a little bit more expensive than what I wanted to spend. So I knew that it was really important to come up with more money down, to get everything where I wanted it to be, but to also not give in. I didn't want to go, I want it today and buy something.
You didn't want to settle.
I didn't want to settle. And, motorhomes are not for appreciation. They're not an investment. No. The minute I drove it off the lot, it's not worth what it was the day I picked it up.
Right.
And so, it's really something that I wanted to make sure that what I was buying was what I wanted to keep for a really long time and that it would have everything on it that I needed and wanted. And, I didn't want to have that buyer's remorse. So,
Yes.
Spent a lot of time on YouTube researching all of the different brands and everything that each one of them came with. And it was hard because, some of them have this and you love that feature, but the other one doesn't, but the other one has something else. But I finally, decided I wanted the Fleetwood. So I did get a Fleetwood. And La Mesa RV was the only dealership that was close to me that sold the unit that had those, in stock for sale. So I went through them, started with the internet department. That's usually how you're going to get your best deal, and negotiated with them, and then went down there and saw it, and they walked us through it completely, and we drove it. And I mean, they were really great. They really were a class act, and it was a great experience. So we're excited. We're going, we're going out in it this weekend.
So exciting. I cannot wait. I have not seen it yet in person.
Yeah. We got to get you
I'm
over
gonna
there
go tomorrow.
Yeah.
I think I'm going to stop by tomorrow after work and check it out because it is definitely a house on wheels.
Yeah, no, it's
mean-
amazing. I'm excited. I'm excited for Stagecoach. We counted it down today. We have 10 weeks.
10 weeks.
Which seems like it's so far away, but it's really not.
No.
So we've got 10 weeks to Stagecoach, so we're really excited because we'll be out there with that. Sitting right next to me, and again, for you guys listening on the radio, you guys are listening to our show that we record Wednesdays live at 5 on YouTube. And but we ordered a special blanket for Stagecoach that if you guys were watching us on YouTube, you could see. But we've got the big Mortgage Mom banner on it, and it's got a nice American flag, and it's gonna be pretty cool. So we're gonna come up with some sort of game for all of our listeners that if they can find our blanket on the field at Stagecoach, we're going to do something. And so I don't know if we'll buy you a drink or we'll do something, but we'll come up with something cool, something fun for Stagecoach. But you guys have to watch the YouTube video to know what the blanket looks like to be able to try to spot us there in that big field.
Come out and meet us, and maybe we'll get you a drink.
Yeah, exactly. We'll do something. We'll come up with definitely something fun. So anyway, this is Mortgage Mom Radio. What do? We do, like I said, we're talking all about home loans, finances, down payments, credit reports, everything. You know, we're going to get you there into homeownership. And if you guys like to watch us, please subscribe to the channel, turn on your notifications so that you do know when we are live, when we're going live. And that way you guys can watch us in advance. You can put all of your questions right into the feed of the YouTube channel. We're going to read those out loud and we're going to answer them for you. Just say hi if you want to drop a hi and tell us that you're watching. That's awesome too.
Yep.
We love that.
Fun.
Yeah. So anything catching up with you? I mean, I got the big motorhome. I did it. I did it.
Nothing quite as exciting as you. It was a really good friend of mine's 40th birthday this weekend. It is my godchildren's mom. So I got to be the one that distracted her for the day for her surprise party.
Nice.
So I took her out for a girls' day. So it was a lot of fun. Went and got a facial, manicure, pedicure, and then went out to the blowout lounge and got to do that. She had no idea. So I took her to do some stuff she's never done before. Then she got to get her hair done, get all fancy. Took her to the house. I'm dropping her off, and it was so cute. So we pull up, and she's like, wow, someone's having a party. And I said, yeah, it's at your house. And she giggled. And
she had no idea what she was walking into.
No idea that I was being honest.
Yeah.
And we open the door. Everyone yells surprise. She turns around and runs back out and into me.
Oh, no. That's funny.
Because she was so shocked. And it was great. It was such a fun time. And she's such a wonderful person that it was such a great thing to be part of that.
Yeah.
And it was just a great night and great day.
That's awesome.
So, yeah, it was a lot of fun.
So how hungry have you been?
I'm starving. I'm very hangry. I'm having a very hard time. This is finishing up week 4, right?
Yes. We just finished week 4.
Yeah, we just finished week 4 of our Jenny Craig, our diet, and I'm starving.
Yes.
I'm starving. I
almost feel hungrier now than I did when we got started. I'm not sure what's going on, but I'm starving
more
too.
Hungry. I'm so tired of salad. I've never really been a salad person to begin with, but in the beginning I was like, okay, the salad tastes great. Now I'm like, I don't want to eat another salad for a very long time, and we have salad every day with our lunch.
Right.
And our food is I just want real food. I really want like a huge burrito or a big thing of pasta. Anything, honestly.
Yeah.
I'm really struggling this week.
Yeah, it's been hard, but we're doing it. We're sticking to it. We are losing. We are coming down in pounds, so that's a good thing. And you know, our goal is to have all of our weight off, our goals met by Stagecoach. So we're going to do it. We're going to get there.
We're 10 weeks left to get there, and we still have quite a ways to go.
We do. So, well, and that was kind of frustrating today, you know, because you walk in and you're feeling it, and you're feeling like you've lost weight, and you're so proud of yourself. But you get on that scale, and you're like, we still have so far to go.
Yeah, and I went up 1 pound.
Yeah. Well,
so,
it happens.
You know, it was a little bit of a challenge today. I know, and it's okay, and I'm going to have those weeks, but I'm thinking, I'm starving. I just want real food. I want a cocktail. And I went up a pound.
Yeah,
so,
that's been pretty hard to give up, to be honest with you.
Yeah.
it's been really hard.
You know, after the long work week and the days and everything else, you just kind of want to relax. And okay, Girl Scouts, you're killing me.
Yeah.
Okay. So I do have my Girl Scout I buy from. So I bought 13 boxes. and they're sitting in my cupboard, and I just want to sit on the couch and eat a box of cookies. Not a cookie. I want a box
Not
of cookies.
one box, or not one cookie,
No,
but an entire
I just want
box.
to sit down and eat an entire box.
Yeah.
So, yeah, it's a struggle. Not a good time to go on a diet when it's Girl Scout time.
When it's Girl Scout cookie time. Well,
Yeah.
you know, you got to hand it to them, though. I went into the grocery store for something last weekend, and I don't remember what it was. And I actually bought boxes from your Girl Scout.
Right.
And I think I still owe you money, actually.
Yeah, it's okay.
But, you know, I was walking out of the store, and they're out there, would you like to buy some cookies? And, you know, if you think about it, it is the hardest thing in the world to, you know, to sell. Selling, if you're in sales, you know, it's something that you've just got a different personality. We're all type A if you're in sales. But it's really hard. It is really, really hard to do that. And those little girls are actually out there learning some really good life skills. I mean, they really are.
Absolutely. And, you know, absolutely. If you're listening and you see a Girl Scout, even if you're not buying it, take the time. Let them do their spiel. This takes all the courage they have to talk to strangers and ask them to buy and tell them why they're selling it and the badges and all the things that they have to go through for this. I couldn't do it. I can't stand outside a grocery store and ask someone to buy something. It's really a difficult thing. And these girls get out there and they bust their butts and they have their goals and they're trying to earn things.
They're trying to earn their patches. And
all the different things that go with it. So just give them a minute of your time, even if you can't buy.
Yeah. Yeah, I agree. Yeah. So that is our catching up with Mom.
Yeah.
It was fun stuff. Remember that we are on YouTube. We're on Wednesdays at 5, and we would love to get your questions, answer those for you. All you got to do is log in, go to our Mortgage Mom radio channel, subscribe. It will tell you, it'll send you a notification when we are on live. We want you guys to put those questions in the feed. We want to read them to you. We want to answer them for you. We are going to take a quick break, but when we get back, we're going to actually have our tax grandma on. And she's got some really great information for self-employed borrowers. I believe that's what she told me, and I could be wrong. So we'll see. We do this live. There's no cutting, and if you guys want to see us do it and us make mistakes, and you know, you guys can actually watch us do it live. There's no script. We're just literally Debbie and Heidi just rolling, and we talk about whatever comes up. So we are going to take a quick break, and then we're going to get Denise Taylor, our tax grandma, on, and I believe she's talking about some self-employed income, which is great. So give us a couple minutes, and we'll be right back.
She's the mortgage mom.
Mortgage Mom here. Did you know that property values are up and interest rates are down? Do you have some debt that you'd like to get paid off? Give me a call. It's 844-935-3634.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act, California NMLS ID 237926. Also licensed in Texas and Tennessee, 184373, Arizona 094-1504, and Nevada 57237.
Do you own your home? Have you considered what could happen to your home if something happened to you and your family had to go through the dreaded probate process? Hello, I am the estate planning mom, and my name is Krista Hermance. I am an estate planning attorney at Hermance Law. If you own your home and something happened to you, depending on how title is held, your family may have to go through probate court. Probate in California can take an average of 12 months to 2 years to complete. It is very expensive and public. A will, while it states how you want your stuff distributed, doesn't actually avoid probate. It just guarantees it. If you want to avoid probate, a trust might be your best option, and we can help you figure that out. We have offices in Ventura, Westlake Village, Santa Clarita, and work with clients virtually throughout California. For information, text WILL to 474747. Again, text WILL to 474747.
This attorney advertising is intended for general information only and not intended to be legal advice, nor does it create an attorney-client relationship. Attorneys at Hermance Law are licensed to practice law in California only. You should seek advice from a legal professional licensed in your state. Hermance Law is located in Ventura, California, and can be reached at 805-518-9633.
Pulled over now, so we're good.
All right. Well, we are back. Welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and as always, we've got Heidi here with me.
Welcome back.
And I've got our tax grandma, Denise Taylor, on the phone with us. And I actually asked her, I said, we're talking about self-employment, right? And then she said, well, no, actually, I've got some other things going on that I wanted to talk about. I want to invite everybody listening. You guys can hear the grandma. She's not here. She's not brave enough, are you, Denise, to get on here?
No, not at all.
She's not brave enough to get actually in front of the camera, but you can hear her. And if you guys want to ask the tax grandma any questions at all, please go ahead and put those questions into the feed. We'll read them to her while we're on the phone with her, and she can answer those for you. So anything at all about doing your taxes, you can ask her questions. So you started off telling me that, and then I said self-employment. You said, oh, I've got some good stuff on that too. So we'll kind of hit it all. But you said you've got some things that you've been starting to encounter and experience as you've been starting to begin doing those returns. So, give us, fill us in.
Okay. This year's been really exciting. We've had some real boring years with taxes, but this has got to be one of the better years going.
Wait a second. There's never excitement with taxes, I think.
No, it's really exciting. This year's really, really good because we've got they have actually created some tax resurrected. They're calling them the zombie deductions because they've been resurrected. The Consolidation Act of 2020, which was just signed a few weeks ago. And what it did is and you're going to enjoy this because this comes into your world a lot. Remember when PMI went out?
Yes.
The principal mortgage insurance went out, it's back. And you can take your tax return from 2018 and do an amended return and get it back now. You can get the energy credits back. You can get, if you lost your home in 18, you were responsible for the tax on the canceled debt between what you owed on it and what the lender counted it as the fair market value. That became a tax liability to you. You can now go back and resurrect those deductions and get them back. There was some major ones. There was four major ones, but there's some minor ones. The energy credits came back. Some really good stuff. So if any of your listeners, their tax preparer said, well, this would have been good last year, but you can't do it this year, except for the 2106s, that did stay. All of those itemized, the deductions, what they call above the line, those are still gone for federal. But what I'm finding now is I'm doing people's taxes that I'm getting some new stuff coming in, not my clients because I watched for them. But as I'm kind of hooking up with the new tax season going in, they're bringing me their 2018 returns because that's how I'm going to have to carry it on into 19 for any carryovers. A lot of people really messed up because even though the 2106, which is the business expenses, was disallowed, they just didn't take them to the preparer. They just said, we don't need them. Well, that wasn't true on the state. The state still allowed it. There was a lot of things that they allowed on the state that wasn't allowed on the federal, but now with the Consolidation Act of 2020, you can now go back on a lot of those things, not the 2106. All those are still gone for the federal, but a lot of the things did come back. And so that's really exciting.
Okay, so back up for us for a minute. So when you were saying that if you lost your home, the difference between what your payoff was, what you owed, and what they turned around and sold it for, you were actually liable or responsible for that difference. I do understand what you mean there. But were there certain years that you're talking about that you could go back now and you can get those back?
18. Yeah, 18.
So in 2018, if you lost your home to foreclosure, would that be the same for a short sale as well?
Yes.
Okay. So
anything that created a canceled debt, a 1099-C canceled debt, and up through the end of 17, it had already been covered and you weren't required to do it. But then in 18, that particular deduction, it went away. So in 18, you were responsible, but now you can go back and correct it because now it's been reinstated.
Now, is that any cancellation of any debt, not just mortgage, but like credit cards? If you get a collection, sometimes they'll actually charge it off and send you the 1099. I've seen that happen with private student loans. Is it the same for those personal debts, or are we talking mortgage only?
this particular Consolidated Act of 2020 is for only mortgage. But if someone has had a canceled debt, credit card, or any other kind of debt, and they're insolvent at the time, they should look at doing a test for insolvency. And quite often you can offset that debt because of insolvency using a form called 982. It's a very kind of weird, obscure form, but they should look at Form 982 and see if it does meet their needs. I mean, that's too vague for me to give that kind of an answer, but that's something they should look at. They may be able to either remove that debt or to place it somewhere else. It's very complicated to try to explain, but have them look at Form 982 because that may work for them.
Okay. Now, in order to be considered insolvent, do you have to be in the middle of a bankruptcy, or it's just pretty much based on your income, assets, debts, and kind of your situation at the time?
Yeah, you just have to be upside down. You have to have more debt than you do assets, and there's a worksheet that you can work it out and see if you qualify. Just answer it honestly and see if it meets your particular issue.
Very cool.
Most often it does. People don't usually lose their homes unless they're upside down. So, I'm sure there's exceptions to that, but generally speaking, people will do their best to save their homes.
Right. Wow, that's amazing. So, again, anybody that is watching or listening, if you guys have questions for the tax grandma, just go right into the feed right here on YouTube. Put in your question. We can read that to her. She can answer it for you right away. You're hearing her. You're listening. And anybody that is listening to us on Go Country 105 on Saturday, we just recorded the show Wednesday. We're on live at 5 every Wednesday. So if you guys want to be able to ask us questions, jump on YouTube, subscribe to the channel, turn on your notifications. That way you know when we are live and you can get right in there and start asking questions, and we're going to read those out loud. You guys want to call us. You want to be able to hear your voice, just like we've got Denise on the phone and everybody can hear her even though she's not sitting here with us. You want to hear your voice on the radio and you want to hear your voice on YouTube, go ahead and give us a call at the office. It's 844-935-3634. You want to do that on Wednesday between 5 and 6 when we're recording, and you guys can get on the show, ask us your questions. We're going to answer them, whether it's me or Denise or Krista when we have her in, or the Credit Cowboy was in last week. So tons of good stuff, lots of education and learning, and we want you guys to take advantage of that. We have a question here. It's from Tech Mom. I love that. And I love that she's a mom. That's amazing. Thank you so much for watching. She's got a question. She says, my son is turning 18 this month. I want to continue to receive a refund rather than pay. I'm currently claiming 2. Should I up that to ensure I continue to receive a refund? And that was for you.
Actually, my rule of thumb, because the new form is so insanely complicated, the new W-4 form is just really crazy. I looked at it the other day to help somebody through it, and I was confused with it. I kind of understood what it was asking.
Yeah, if you're confused, that's actually that's not good.
It's a brand new form. It just came out like a couple of weeks ago, or just within this last month, and it's mind-boggling. I don't know how people are going to make their way through it. My rule of thumb has always been to have everybody do one less than what they really are. And that way they're covered. I mean, and of course that needs to be adjusted for people that really, really have to squeeze out every dollar that they can. But for my family and my kids that I do their taxes, I've always had them at one less than what they are. So if you're the one thing that gives people, and this is a word of warning, people don't think about it, and I'm just using a general example, that the husband is working and he's married in 2 because they have 2 kids, and the wife is working and she's got married in 2. Hello, that's married in 4. So just be careful, because if one is doing married in 2, the other one should do married in 0.
Gotcha.
If you're really married in 2, or in my case, I would go one less than what they really are. But that's just a suggestion. There's no hard rule about that. But when my clients call and ask me, that's just a very safe, quick answer.
Just go one less. So here's a question, though, that I'm thinking for Tech Mom, because I'm in her situation. I've got, Manny's 19 years old. Her son is 18 years old. Congratulations to you, Tech Mom. Being a mom of boys is awesome. It's just totally amazing. But what I'm thinking is, Manny lives at home. He's been going to school. I'm really taking care of him. He's got a job, but he's not making very much at all. So he did get a W-2 from last year. He worked at Hurricane Harbor for a little bit in the summertime, and worked for me a little bit part-time. And so, his W-2 was very, very small, but I'm still claiming him because he is still truly my dependent. So does she really need to change her withholdings if he is still living at home with her and she can still claim him as a dependent?
No, I mean, I'm not sure I quite got the whole question where you were going, what the actual question is. But in generally, a dependent can stay at home. A dependent can be your dependent until they're 19. Once they're 19, then they have to be a student to be your dependent.
Okay.
So just because if you've got a child that's 19, they have actually stepped away from your dependency unless they're a full-time or more than half-time student. So you need to be really careful on it. And it's what they are on the last day of the year, not necessarily on their birthday, but what they are on December the 31st of that particular year. Like say in 19, if they were still 18 at the end of 2019, then they're good to go. If they turned 19, then they need to be a student. And there's some variations on that, but that's the hard and fast rule. Is from 19 to 23, they need to be a student to be a dependent.
Okay, but I guess where my question was going was if they are still your dependent, then you really don't have to change your tax withholdings. It doesn't matter that they've turned 18. So assuming that they're in school at least part-time or more, and they are your dependent living at home, they qualify to be a dependent, you don't have to change your tax withholdings just because they turned 18. Even if they have a job, and that's kind of where I was going with Manny. He's got a job. He didn't make very much. He's going to have to file tax returns. What is the number, since we're on that subject, what is the number that somebody has to earn in order to file taxes?
I'm not going to be able to answer. I need to look that one up. Nobody's asked me that, and I haven't had a reason to look at it. But there is a gross income test, and I will look that up and give you that answer back because I'm not sure what it is for this year. It's usually been around 35, but let me look at that because I don't want to give out the wrong answer on that one, and nobody's asked me that question for this particular tax year.
Yeah, that's
so
okay.
Let me look that up and get back to you on that.
Yeah, and when you say it's around 35, are we talking 3,500 or 35,000?
Yeah, it was, but I want to hold off on that because I want to double check on it. But there's 5 tests for dependency, and one of them is a gross income test. And I need to look up and see what the number is this year for gross income test. But someone else can look it up as well. Just go to the irs.gov and put in gross income test, and it quickly will tell you what the amount of money is.
Okay. All right. We can do that. So you were going to talk about self-employment because I had asked you about that, and you said that there were some changes to self-employment. You want to hit on those?
Now, this started in 18, and this is some people missed it. I've seen already a couple 3 returns when I'm looking at new taxpayers coming in, and I'm looking at their 18s and reviewing them as a courtesy to see how bad they screwed them up and see what can be fixed on them. So the 18, there was this great feature for people that were self-employed, rental properties, and mostly those are those ones that were in there. Some K1s, I believe, came into it, but you need to look that up. It's called Section 199A, and it's a qualified business. And if the business qualifies, then you have to take a 20% of net, and it's pretty cool. It does the mathematics. Any software you're using will do it because it's a very complex process, so the software actually does it for you. But just look up Section 199A and look on the back of your tax return, and it's about a third of the way down the signature on the page as you're coming down on the second page, and it is saying there whether you qualified for the business opportunities, and that was a good deduction, and a lot of people missed it.
Huh. Well, that's very interesting, and I think I'm going to have to look to see if maybe I qualified for that.
There you go.
I would think I kind of got the insight on that, and yeah, you probably would have, and just make sure that they took it.
Okay, perfect. Well, thank you so much. I'm going to have Mikey, I want you to type into the feed right now Denise's number. If anybody's out there listening, you guys want Denise's help, or you want to give her a call to get your tax returns done, you've got questions for her, you can reach her. Give us your number, Denise. Denise, did we lose ya?
I'm here. No, I'm here.
Okay. What's your telephone number, Denise? Give us your number.
Is 951-965-1060.
Okay. So it's
one last little quick thing. Anybody that doesn't have health insurance in California, you really need to get on the program because they are charging a huge penalty in 2020. This is not for 19, but this is for 2020. And there's going to be a lot of Californians that are really taken by surprise by the California penalty for not having insurance. There's no federal penalty, but there is definitely going to be a serious California penalty for 2020.
okay.
So please check into that.
Very, very good. Okay, so one more time. Mikey doesn't actually have headphones on, so he couldn't hear you. So I'm going to repeat you. It was 951
965
965
1060.
1060. Perfect. Well, that was awesome, Denise. Thank you so much. If you come up with more that you want us to talk about on future shows, we'd love to have you on again. You're very, very helpful. I think that anybody out there that does not maybe have their own, tax advisor, CPA, you are a registered agent with the IRS, right?
I'm an enrolled agent.
Enrolled agent.
So close.
I'm so close. I keep forgetting. I know it's different, but if you guys need Denise's help, she really, truly is amazing. So give her a call. Thank you so much, Denise. Really, we appreciate your time.
All right. Thank you.
All right.
Talk to you
Bye-bye.
later.
All right.
All right.
Bye-bye.
Bye-bye.
So what did you think about some of those changes?
Interesting.
Yeah. Did you find it when I saw you
No.
looking on your phone?
I was trying to find it, but
Yeah.
it came up with 148 results. So I didn't figure now was the time.
Yeah, so we'll have to look that up, and we'll get back to everybody
Yeah.
and tell them, what that number is. And I really like it when people do that. That she didn't just make up an answer to appease us while we're on a show.
Right.
She literally said, I haven't had anybody ask me that in a really long time. I haven't looked it up.
Right.
Me and you were just having that conversation earlier today, and I thought it was like around 12,000 a year, and you were thinking maybe it was 25,000, and then
Right.
she said 35, and I didn't know if she meant 3,500 or if she meant 35,000.
Right. Yeah, I was thinking, 3,500.
Right. That's not everybody's filing taxes at
Right,
that point.
everybody.
Yeah. So, but no,
No wonder they're so far behind.
exactly. But it sounds like there were a lot of things that have been reconciled that maybe everybody should be taking a double look at their 2018s. One of the things that she mentioned that I actually it sparked in my head. I just had my CPA send me my tax returns for last year, and just to review before I file them. And for Manny, they had him check marked not as a dependent, but in a different box than the other children were. And I assumed that was because he was over 18 years old. But in reality, he wasn't on December 31st.
Right.
He didn't turn 19 till January of this year. So really, he should have probably been check marked on the other side of the box. And there is absolutely no reason why we ever want to give the IRS a reason to audit.
No.
Or wonder why are you claiming somebody is a dependent. We just don't want to open a box that doesn't need to be opened. So I need to go back and actually look at mine.
Yeah, I'm actually bringing mine. As you know, I got a new CPA. So he actually already asked me to bring 17 and 18 to him because he's starting new with me. That he's like, let me look at everything. I'm going to bring it. Obviously, I rescheduled my appointment.
Yes, she made an appointment for today while we were recording YouTube. So she's going in tomorrow instead.
Sometimes you don't connect the dots of date and time.
Right.
So I'm going in tomorrow for my exciting tax day.
She was so excited about taxes. I'm like, taxes aren't exciting. We all have to do them, and it's an interesting topic, and it's something that we all have to know about the rules and the changes and how are things going to be affected. And at the end of the day, still having that mortgage, having that deduction, those are all things that are so beneficial, and a part of why we all want to be homeowners and why homeownership is so important. But it's not. She was excited,
But let's be honest. We get excited about mortgage.
we do.
Who
we
gets
do.
excited about mortgage?
Yes.
Okay, just us.
Yes.
So, in all reality, that's what she does.
That's what she does.
It's exciting for her. There's new tax laws and new ways to get money back and new ways to do what she does. We don't get it. We're like, taxes.
Right.
But most people coming to do a refinance go,
alone.
refinancing.
Alone.
So I think it makes sense.
Yeah, absolutely. All right. Well, for anybody watching, you guys have questions, please go ahead and put them in the feed. We'll read them out loud and we'll answer them for you. Thank you again so much for your question, Tech Mom. We hope that we answered it for you and you actually got the answer that you were looking for. Anybody that is listening right now, it's you guys are on Go Country 105 Saturday at 7, between 7 and 8. Just because this is not live, it's recorded from Wednesday on YouTube. We are at the office. We are taking calls and we are scheduling appointments. So if you do want to talk with me or you want to talk with Heidi, you want to get on the books to talk about a refinance or you want to talk about a purchase, how do you get started? Where do you start? Can you pull money out to do those home improvements? Can you get that debt consolidated? Call right now. It's not a problem at all. It's 844-935-3634. If you're watching the show Wednesday at 5 and you guys want to call in with a question, you're more than welcome to do that. Or again, put it right into the feed and we're happy to read that out loud as well. So we are going to take a quick break. And when we get back, I want to talk a little bit more about the VA funding fee. We kind of touched on it a little bit in one of our shows about a month and a half ago or so, maybe 6 weeks ago. But I do want to talk about a little bit on that because it has changed, which is fantastic.
Yes.
I actually just had one today that the funding fee is actually only 1.6 instead of 3.6, which is huge. So I want to talk a little bit about our vets, and then we'll talk a little bit about down payment assistance because I've had a lot of calls lately from people that are interested in down payment assistance, but we've got to do a little bit of credit repair first. And so we'll talk a little bit more about that. So
I wanted to talk a little bit about income.
Okay, yeah.
And how we look at it. I think there's a little bit of misunderstanding out there of how we have to look at your income for qualification purposes.
Yeah, for sure. All right, well, we've got a lot of great stuff to touch on right after the break, so we'll be right back.
Do you own your home? Have you considered what could happen to your home if something happened to you and your family had to go through the dreaded probate process? Hello, I am the estate planning mom and my name is Krista Hermance. I am an estate planning attorney at Hermance Law. If you own your home and something happened to you, depending on how title is held, your family may have to go through probate court. Probate in California can take an average of 12 months to 2 years to complete. It is very expensive and public. A will, while it states how you want your stuff distributed, doesn't actually avoid probate. It just guarantees it. If you want to avoid probate, a trust might be your best option, and we can help you figure that out. We have offices in Ventura, Westlake Village, Santa Clarita, and work with clients virtually throughout California. For information, text WILL to 474747. Again, text WILL to 474747.
This attorney advertising is intended for general information only and not intended to be legal advice, nor does it create an attorney-client relationship. Attorneys at Hermance Law are licensed to practice law in California only. You should seek advice from a legal professional licensed in your state. Hermance Law is located in Ventura, California, and can be reached at 805-518-9633.
She's the mortgage mom.
Mortgage Mom here. Did you know that property values are up and interest rates are down? Do you have some debt that you'd like to get paid off? Give me a call. It's 844-935-3634.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.
Debbie Marcoux is licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act, California NMLS ID 237926. Also licensed in Texas and Tennessee, 184373, Arizona 094-1504, and Nevada 57237.
All right, well, welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and this is Heidi Slagle Points.
Welcome back.
And this is the last piece of the show. We've got about, 20 minutes or so left, and we've got a lot of really great topics right now that we do want to touch on. Anybody's got a question, please feel free to call. If you're listening to us on Saturday on Go Country, we love that. Please give us a call. Get yourself an appointment set up. You can talk with me, talk with Heidi. We're going to get you on the books. That doesn't mean you've got to walk in and see us. We're going to get you on the books for a phone appointment. We're going to talk to you one-on-one, answer all of those questions. So we do have my assistant Chris is answering all of the phones right now. We've got the call service for backup for him, and we can get everybody a phone consultation. So please give us a call. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. If you want your questions answered right away, then I would suggest that you guys go to YouTube, search for Mortgage Mom Radio, subscribe to our channel, and then turn on your notifications. That way, next week, you know when we're live, and you can actually ask those questions right into the feed, or you can call the office, and we're going to get you right in, right online. Everybody will be able to hear you on YouTube, and then you'll hear yourself again on Go Country 105 on Saturday. So make sure you guys get those questions coming in. But I said right before the break that I wanted to talk about VA because they had changed those guidelines with the funding fee. So I want to make sure that all of our vets out there understand the funding fee and how it works, because we had some confusion this week with a couple of clients. And again, you know, it's all about what's happening in that week, which is kind of what spurs what we're going to talk about, right? So I had a client that is a veteran. They have a VA loan already, and they are going to sell their home and buy another and get their next loan also as another VA loan. So they are not 10% or more disabled, considered disabled with the VA. So when you are considered disabled with the VA and it only has to be 10% disabled or more, your funding fee is waived. When you are have no disability or less than 10%, you do pay a funding fee, and you pay less for that funding fee the very first time you take your first loan than you do when you do a subsequent use or multiple times after. Right. So this client was actually going to originally buy the property, sell their property, take the proceeds from the sale, drop it in their pocket, maybe do some upgrades to the house, and do a 100% loan for a VA loan. And once we looked at the 3.6% funding fee for the second time or more uses at 100% financing, they were buying a condo for $647,000, I believe was the number. And it was going to be somewhere, I'm not doing math. You guys can see me right here on YouTube. I don't have a calculator, but it was right in the range of about $23,000 is what that funding fee was going to be, which is giant. It's just absolutely huge. Yeah. So
it's expensive.
It is. So we started talking about the proceeds from their home and maybe putting it down on the house to get that, because you're also financing $23,000 more. Now their loan amount is $670. It's not $647. So we started talking about putting some money down. And if you do put down at least 5%, that funding fee drops to 1.6. That is 2 points. So 2 points on 600,000, not 647, but 600,000 would be $12,000. So they saved about $16,000 by putting 5% down on that loan, which is a giant savings. So I just want to make sure that everybody out there understands. Number one, it can be waived. Number two, it's not up to me. It's not up to Heidi. It's not up to the mortgage company that we work with. We have absolutely no control over the funding fee. That is a VA guideline that they require that we charge that. So, but you can reduce it. So based on your down payment amount, you can get that funding fee to drop. Right. And just like with your first use, if you come in with more of a down payment, that first use will also drop. So anybody out there that does have a little bit of money that wants to put into the mortgage, and you're a vet and you're going to use your VA loan, that is definitely something to bring to our attention when we start working with you and taking that application.
Yes, because the numbers will drastically change. And when you're out shopping, you want to make sure that when you are shopping, you are actually comparing apples to apples, not apples to oranges. Because if one company's putting you at 100% financing, another company's putting you at 95% financing or 90% financing, those numbers are going to drastically change, especially when you're talking about a funding fee. And the percentage for that funding fee drops by 2%.
Right. You can't ask me what the numbers are at 100% and then call another lender and say, well, I'm going to put less money, or I'm going to put money down. Right. And then and compare my estimate with their estimate. You've got to, if you're going to do the comparing, you're going to do the shopping, which we always suggest. We're not here saying don't shop. You should absolutely shop. It's just like shopping for your interest rate. But you cannot shop on different days, and you cannot shop with different situations. You can't talk to Heidi and say, well, my property value's $400,000,
Right.
and then call Debbie and say, well, my property value's $450,000. Guess what? You're going to get a different interest rate because you have more equity in the home with the higher appraised value. So just make sure that when you're doing your shopping that you have all of the same information across the board to be able to truly be comparing, like you said, apples to apples,
Right.
not apples to oranges. So something really important that I just wanted to bring up, because I think that that's a big deal. I think there's a lot of veterans that don't understand that their funding fee could be less if they did have some money down.
Right.
So
and you know, you don't have to do 100% financing. And I do think some vets believe that, you know, they hear it 100% financing, 100% financing. If you have money in the bank and you want to have a lower loan
Monthly
amount,
payment, sure.
a lower monthly payment, then that's your choice. It's just available at 100%.
it is available. And 100%
financing.
financing is awesome. It really is. And I was asked that question when I was on the phone with those clients. Why is there a funding fee? Well, maybe we should just look at a conventional loan and pay PMI insurance. And I said, you've got to look at it this way. The VA funding fee is basically the mortgage insurance. They're doing it in a different way, but it's basically the mortgage insurance. You don't have mortgage insurance on a 100% loan, where most of the time, normal conventional loan, you have to have at least 20% down payment to avoid the mortgage insurance. Now, there's ways around it, but you're still going to take out cash.
Right.
You're going to buy out the mortgage insurance. You're going to take a higher interest rate to avoid the mortgage insurance. So if you don't have the 20% down, there's mortgage insurance on conventional. There's mortgage insurance on FHA. So in all reality, that funding fee is really not that bad of a deal. And when I actually compared the full 3.6% funding fee with the reduced interest rate on the VA loan, and I compared it to the lower loan amount on conventional, because there would be no funding fee to finance,
Right.
but I ran the mortgage insurance quote, the monthly payment was still about $150 higher on that conventional
Because of
loan
the rate
because of the
with the
difference in
mortgage
the interest
insurance.
rate. And with the mortgage insurance, the VA funding fee was actually, even with that giant funding fee, was still a better payment. So, you know, you've got to trust in us. Give us a call. Let us work you through it. Let's go through all the numbers. 100% financing is fantastic. You don't own a home, you don't have money saved, and you need to get into something. It's amazing. But if you're being, you know, penny pincher and you're finicky and you don't want to spend as much, you know, in the closing costs and financing those fees and things, you know, there's definitely options there if you can come up with some money down.
Yeah, absolutely. So there's always options, right? You're not stuck in any particular spot. You get to walk through and decide what you want to do, what you can do, and we can always run those scenarios. Just when you're comparing, make sure you're running the exact same scenario.
Right. Absolutely. So again, if you guys have questions, if you're watching and you want to ask us, please feel free. Type them into the feed right now. We're here. We're live. You guys are watching us do it. If you guys are listening on Go Country on Saturday, please give us a call. It's 844-935-3634. We'd love to get you scheduled for a phone consultation. You can ask for Debbie or Heidi. We can get you on the books for either one of us. But, you know, we'd love to hear from you. We'd love to help you one-on-one, and we want to do that. So I also said that I wanted to talk about something else.
Down payment assistance.
Thank you. I couldn't remember what it was because obviously we're live and this,
Right.
you know, we're just flowing and then you get your head into another gear. So down payment assistance, I did want to talk about that a little bit. So a lot of people have called actually over the last week and a half, 2 weeks. And, you know, they're interested in buying a house. They don't really have the money saved. They've got a, 580 or lower credit score, or even 600 or 610 or 620. The one thing I want everybody to understand with down payment assistance is that typically you have to have at least a 640 credit score. That is with CalHFA. We do have programs that will allow a 620 credit score.
Yes.
If you don't have the 620 credit score, we can't do down payment assistance. So if you don't have the money saved for the down payment, then you're not quite ready to buy the home. So what do? Well, we look at what the differences are. You know, is it easier for you to save up a little bit of money for the down payment, or is it easier for us to do a little bit of credit repair, which is why we had, Steve on last week to talk all about credit. So, if we're going to look at the different options, again, the answer is never, ever no. It's not today, but let's figure out how we can get you there.
Right.
We're never going to tell you no. We always want you to be able to have a game plan, be able to create something that is going to get you there in the future. That is the most important thing. if you don't have a 620 credit score, that doesn't mean you can't buy. You can. We can go down as low as a 580 credit score with FHA, but you've got to have your 3.5% down payment. So, there's going to be things that we're going to work through, and we may have to make a game plan, or we may be able to say, hey, man, you're ready.
Right. Yeah, we don't know. You don't know. The longer you wait to make your game plan. So there's no reason to delay. We get a lot of people like, well, I'm kind of embarrassed. I'm nervous for you to run it and hear your answer. Just remember, it's not going to be no. We have seen everything.
Everything.
And we've probably been there ourselves.
Oh, I have been.
So,
hey, I've been divorced once, so I got to tell you, I've been there.
Right. I mean, we have. So don't be embarrassed. But the longer you just prolong even speaking with us, the longer it's going to take for us to help you with an action plan and getting you down that path to putting you in that home or getting you in that refinance that you desperately need for your cash flow improvement. So give us a call. We'll walk through it. Just be honest with us. Open, honest. Tell us everything we need to know, and we can work with you, whether it be working on savings, working on your credit, talking about down payment assistance, what's the right program? What isn't the program for you? And why? A lot of people hear these amazing ads, right?
Mm-hmm.
We all hear
Absolutely.
them.
Every day.
I get them all the time. I could be at a 2% blah, blah, blah financing. I promise you I cannot. And why can't I? Because I can't afford a 15-year mortgage because my mortgage is going to double almost. And I cannot afford that. So I'm not going to get 2 and a, half, 2 3/4 rate, whatever.
Right. You don't have 50% equity in your property.
I don't have 50% equity in my property.
Yeah. You're not doing a 5-1 arm.
Nope. But it doesn't mean that down the road something won't be available for me in those options, but not today. So give us a call. We can help you out with credit, talk about where you're at, talk about where you need to be, how you're going to get there today, tomorrow, a year. We have clients that come back to us a year, 2 years, and they buy a home.
Right.
And we're here for that.
Absolutely. And just like you mentioned, we've got to look at all the different scenarios, which I know that you want to get into talking about income because that's kind of been another big piece. And we were kind of laughing at lunch yesterday. And yes, you guys, sometimes we laugh about you guys, but it's just between the two of us, and we're not laughing at you. We're laughing with you because anything that you say or you do during a conversation is actually very, very typical, and we get it over and over and over and over again.
Yeah.
So it's just, kind of one of those funny things, just like she was so excited about taxes earlier. Right. Denise was, we it's just our mortgage lingo, our talk. But we've actually had some scenarios come up recently where the income wasn't quite what the client was anticipating that it would be or what they thought that their income should be.
Yep.
So we'll get into that. But that is one of those things that, especially if you're self-employed or if you just started a new job, but you're an apprentice and in a year from now, you're going to be at a totally different pay rate. Those are the things that we can talk through with you and say, well, today you're going to qualify for this. But next year, if this is where your income does go to, then you're going to qualify for this. So during that year, let's talk about how much money do you need down? What kind of monthly payment's comfortable for you? Well, what does that mean in a sales price? Oh, well, that's not enough for you for sales price? Okay, great. Well, then maybe you need to increase either your monthly budget or you need to increase your down payment.
Or reduce your debt.
Or reduce your debt. Exactly. So, we go into all of those things with you. And especially if you're self-employed, right now it's tax season. A lot of self-employed borrowers haven't done taxes yet. So this is a great opportunity to know, hey, I'm thinking about buying a home later this year. What kind of income do I need to show? I mean, let's face it, you guys all write everything off you can possibly write off. So maybe this year you don't write off quite as much. Just something that these are the things that we can work through with you that we want to be able to work with you, especially with the refinances. We get those calls too. And, you're up to your ears in debt and you don't know what direction to turn and you want to do a refinance. We don't want you to miss a mortgage payment because we want to be able to get you consolidated. Well, you don't know if you can consolidate. You have no idea how many times, well, you have an idea, I'm sure, but everybody listening, you have no idea how many times that I get a phone call and a client says, I'm not going to qualify, my debt ratio is too high. They don't realize that we're going to look at the debt ratio after the debts are paid off.
Right.
Not where are you at today.
Yeah.
So let us look at that debt consolidation with you. Let's see if we can't, open up that cash flow a little bit and, get you a little bit more comfortable with your monthly, outflow. And, just it's what we do. So we want you to call us.
Yeah. We also have a lot of people that think, oh my gosh, this is how much I owe. And they're looking at their total balance. We are not looking at your total balance. We're looking at your monthly expenses.
Right.
So, a lot of people are like, oh my gosh, but I have a loan for X amount. Yes, but what is your monthly payments? So don't start trying to figure out your own debt if you're not understanding how we qualify your debt. Call us. Let's talk about it, because I was just on the phone with a lady the other day and she'd given me this large number and I'm thinking, there's no way you can pay that monthly. Like no one could pay that monthly.
Right.
And as we started going through it and talking, then she's like, oh, no, but that's my total debt. And I said, exactly. So let's break down your monthly payments.
Right.
And once we got through it, I was like, okay, yes, you qualify.
Yeah.
You know,
fine.
let's take a deep breath. Like, let's just go through it one by one and see where we're at. I've got the time. Let's just take it and figure it out, because it was this moment.
Yeah. Yeah, we can't say it on there.
Moment. And, but once we kind of talked through it and got there, we don't expect everyone to understand how we do it, right? We've been doing it for many, many years, and we can walk through it with you.
Yeah.
We just have to ask the questions, and we need you guys to be honest and divulge the actual information to us and not say, this is all I have. Go ahead, go run my credit. And then we run it and we're like, well, what about this and this and this and this and this? They're like, oh, yeah, but.
Yeah.
Yeah, there's no buts.
Yeah, it does. But here's my favorite one. But my student loans are deferred.
Yes. So
that
they don't
doesn't
count.
matter. That doesn't matter.
They
Yeah.
don't come up until June.
Right. That doesn't matter. Deferred or not, they could be deferred forever. It doesn't matter.
Yeah.
But, so guys, give us a call. It's 844-935-3634. That's 844 We Lend for You. That is the number 4. Give us a call. Get on the books. Make an appointment. Talk to me. Talk to Heidi. It's just on the phone, and let us go through your scenario with you and see what we can do for you. One of the commercials, and before we're going to get into income, I swear, and I know we're running out of time.
We're going to have to do it next week.
We're going to have to. Okay, so
we'll go into income next week. We'll go into some detail on some income, kind of help people to really understand how they qualify,
especially rental income.
Yeah,
and
we'll talk about
monthly debts, leases. Oh yeah, car leases are a good one.
Salaried employees versus hourly versus self-employment, rental income, stuff like that.
Commission, bonus. Oh yeah,
commission.
Yeah,
bonus.
this could be a good show next week.
I think it'll be a good show. Good information for people to have to kind of really understand what we're looking at, how we're looking at it, and why. So it's a little bit less frustrating when they really get into it with us.
I think that's great. I think that's a great idea. And, just as we were talking about, give us a call. Let us help you with the consultation. Let us talk one-on-one. It just kind of reminded me of a commercial that I actually just recorded. And it should be probably running maybe within the next few days or so. But, we just hit mortgage rates. It was last year that I was saying we're at the lowest rates we've had in 3 years, and we're a year later. So I'm going to say it right now. I could be off in months or a couple months or shy or more.
Right.
But we just literally hit interest rates that are the lowest that we've seen in probably 4 years now.
It's incredible.
At least. The rates are absolutely incredible. And we were doing refinances this time last year, and we were telling people that in December of 18, really from July of 18 through December of 18, interest rates could have been close to 5%, some of them even over. Investment properties we were doing at 6%, 6.25%. And, we did, and then all of a sudden in January of 19, rates started to drop.
Right.
And we got to, I would say probably about July, and they kind of held steady and then kind of ticked back up just a little bit, right? And now all of a sudden we're even lower than where we were before. And they're actually talking about how we're getting very, very close to coming down to the same number that we had hit where we were at our all-time ever low. And so if you did a refinance or you bought your home in the last year and a half or, even in the last 6 months, it very well may be worth it for you guys to get on the books with us and talk to us. I can tell you right now, I am a straight shooter. And I have people that will vouch for that all day long. if it doesn't make sense for you to do the refinance, you're not going to save enough. It's going to cost you too much money to do it for the savings.
Yep.
I am absolutely going to tell you don't do it. I probably said that to between 12 and 15 people just this week. But there is a very, very good chance that it is worth it to do it. And if you could save yourself even more, that's fantastic. We have a client that we just closed. We did a loan for her in July. We just dropped her interest rate. I was able to give her a credit back to cover the majority of the closing costs. So the entire transaction ended up running her like $1,500. We dropped her payment $200 a month and got her into an even lower interest rate, which over time is a lot more than $200 a month.
Oh, absolutely.
So definitely get on the books. Give us a call. It's the end of the show. We hope you guys enjoyed it today. We're going to be back next week. We're going to focus on that income.
Yes.
And we're going to stick to it. We're not going to get all squirrely like a dog squirrel.
Right.
We're not going to get squirrel and we're not going to go the wrong direction.
No.
So we will focus on that income next week.
Yeah, I think that'll be great.
Yeah, but definitely give us a call. It's 844-935-3634. That's 844 We Lend for You, LEND, and the number 4. We did change the phone app. We had a little bit of issues with the phone app that we were using. So if you guys want to get our phone app, you're going to text us. Text the word mom to 36260. So that's where you can get your link now. 36260. Text mom, same keyword. Or you guys go to our website, go to mortgagemomradio.com. If you like the show, first time you're grabbing it, go to YouTube. You guys can watch other shows there. Check out our podcast, download it. You can listen to everything for the last, 3 years or something. So it's been a long time.
Can they ask Alexa now?
They can. They can ask Alexa to play the Mortgage Mom Radio podcast. They can ask Alexa for Alexa, Siri, any of them. They can ask for the contact information to give us a call. So we're getting there. We're coming up to speed.
All right.
All right. Well, you guys have a fantastic weekend. We hope it's great. I'm going to be in my motorhome for the first time, checking it out. And remember, if you guys can find us at Stagecoach and you can find the blanket on the grass, there's going to be something coming. So we're going to discuss that this week, and we'll bring that to you next week.
And I'll be at my son's opening baseball game at
There you go.
Castaic.
Very nice. You guys have a great weekend.
All right. Bye.
Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.